It's time to make a pivot in your portfolios. I'm gonna give y'all a portfolio update. I'm gonna show you why I'm pivoting in my portfolio and how to pivot. I'm gonna also show you a little bit of chart stuff, nothing crazy, but just enough so you know where and when to expect the market to flip or go to the other side, right? So let's do the portfolio update. So I got 8 shares, so I'm still dollar cost averaging to the S&P, still dollar cost averaging to Bitcoin. I got 8 shares of Nvidia, which made me $122 in a month in my portfolio. So we finally had a month. I got about a month worth of stats, and my portfolio is up 4.61%, and the S&P 500 is only up 1.67%. So we already beaten the market first month in. Let's continue to beat the market. So I stopped at 8 shares for Nvidia, but it was because of certain things that showed me a sign to pivot, right? Because I've said before, I'm gonna do 10 shares of Nvidia before I move to anything else. But I'm gonna show y'all a little chart work and how to know from geopolitical things and certain things going on in the world how to pivot in your portfolio. Let me show y'all another reason outside of knowing that it's a war. Let me show y'all just a little basic chart stuff real quick, just to show you when to buy when to buy more of your asset or when to stop buying more, right? So down here below the chart, this is called the MACD, right? Moving Average Convergence Divergence. And all that you need to know about the MACD is you need to see the green bars swooping down at the bottom, and the red bars swooping down at the bottom, and the green bars swooping down at the top. You also have two lines. So when you see those lines cross is when those bars at the bottom change, right? So if you're looking at Nvidia on a daily time frame and you see the MACD on a daily time frame switches over. The reason why I choose the daily time frame is because the daily time frame is a perfect medium. You go shorter time frames, the MACD can fluctuate faster. You go longer time frames, they're more accurate. So on a buying purposes, I stick with the daily time frame. I look at the MACD. The MACD on Nvidia is turning downwards, saying that just on the MACD alone, the MACD says that Nvidia should go down, the stock market should go down. So between knowing that there's a war and the MACD crossing, I know it's time to put gold in the portfolio. So my portfolio is up $122 in a month, and we're gonna keep it rocking. So dollar cost average in the S&P, dollar cost average in Bitcoin, 8 shares of Nvidia, and now we are moving to a ETF, right? The S&P 500 is an ETF. ETFs have expense ratios. When you buy an ETF, you want to make sure the expense ratio is low. So y'all might have heard me use, so my next purchase is gonna be gold. Gold is a commodity. It's the first money before paper dollar bills, and it's the only asset to last forever through a lifetime. And gold is a hedge against inflation. So when wars happen, when the stock market is going down, you can expect gold to go up. Because we are in a lot of inflation right now and the war and all that, that's when gold come out and shine harder than the stock market does. And you don't have to buy the bars of gold. You could just buy a ETF like GLD or IAU. So you might have heard me talk about GLD in previous videos in relationship to gold, but all week I did my research because I knew I was gonna buy something else. And GLD has a higher expense ratio, and this I'm gonna show y'all how I decided which one to pick over the other, right? So GLD has a higher expense ratio than IAU. They're both gold, they're both the same thing, but GLD has a higher expense ratio, which means you pay more for that. Your little fees to the broker or fees to the institution for the ETF, right? So you want your expense ratios low. The S&P 500 is like 0.003 expense ratio. So the lower the expense ratio, the better. So not only IAU being the same exact investment is less per share. So You can get more shares of it, but the expense ratio is lower than GLD. You should be able to look this stuff up in your brokerage account. If you can't, you go on ETFDB, etfdatabase.com, and all of the ETFs are in there. You can see the expense ratio, what's the top 10 holdings in the companies in the ETF. But I got the S&P 500 as an ETF. I'm adding another ETF, which is gold. So if we go back, and we look at that MACD histogram again that I was teaching y'all about earlier, if you look at that and you look at gold, you'll notice that NVIDIA swooping down to red, but gold is swooping up to green. So if you want to use certain times when to buy, you let it come down. When you see the MACD switches to green, then you could buy the stock. Now, it doesn't always mean that it's going to continue in the uptrend. It might turn green for 1 to 2 days and come back down. But it's a good gauge just to be like, okay, well, if the news is crazy and the MACD turn red, then we know the market is going down. So gold is my next move. Also, NVIDIA is paying a dividend. Most companies pay a dividend every month. Some don't pay a dividend at all, and some pay dividends every month. Dividends are basically passive income just for holding the stock. So if the stock pays 25 cents dividend every 3 months and you have 4 shares, that's $1 passive income every single 3 months that you created for yourself by just purchasing the stock long term. So I got a strong feeling a good dividend playing asset is my next pivot, because the S&P 500 pays us a little dividend and NVIDIA pays a little dividend. So we moving with gold, but my next priority is gonna be dividend when I make my next move. So far we beating the market, man. I hope this information is helping you outperform the market, whether you are older and you need to catch up on returns, or you younger and you just want to get rich fast. I'm gonna teach you how to do that by just buying the right stuff in the stock market. Y'all make sure y'all like and subscribe.